You're tuned into the It's Real podcast with your hosts, Kayla and Andrew Yagi. Each week, we'll talk about what happens behind the scenes working full-time in real estate and share with you real-life stories, our successes and failures as we work to help consumers and industry professionals reach their real estate and real-life goals. Here we go.
It's episode 59 of the It's Real podcast. I'm Kayla Calendar, and I'm a mortgage lender.
And I'm Andrew Yagi. I'm a real estate agent.
Hi, Andy. How's it going?
Kayla, it's going pretty good. I'm looking out my office window. It's a beautiful fall day, sunny, nice weather. Everything's going great.
I love it. Isn't it crazy how warm the weather's been? It's like insane, and I love it.
I was just looking back from photos from 2020 that popped up, and there was just a ton of snow.
Yeah, we had a blizzard, I think the 20th.
Yeah.
Yeah, I have a good memory with dates, but it was nuts. Like, we had to have our boots and our coats, and I think I was shoveling probably. Taryn had me out in the driveway, I bet.
I bet so. It was challenging.
Yeah.
But nothing like that right now. So we'll kind of enjoy our Indian summer a little bit, which
I know.
has been a little bit challenging in some ways for those of us that farm sugar beets. But as people are wrapping up with their harvest and just harvest across the board, which is great. The weather's been nice. So for kind of hanging out outside, we're building kind of a spec house this year. We're diving into some new home construction, Kayla. So kind of working on that a little bit. So it's kind of nice to get some of that work done. And
yeah, it is.
A little bit easier working conditions right now.
Yeah, I was gonna say for most builders, I was talking to a builder yesterday and they're like, we love it. You know, we're probably wrapping up a few more homes, getting them in the ground. And I mean, not great for some people with what their profession is, but for builders, they're enjoying it. So
for sure.
Yeah, I agree. I think a lot of home buyers too, like it's a little more difficult to move around when it's, you know, the streets are covered with snow to go look at a house than when it's, you know, nice out. You are a little bit more willing to get out there. So I think it's been good for buyers too.
Yeah, I think so. What's new in Kayla's world?
Not a whole lot. You know, it's been busy in terms of people closing on loans, meaning purchase agreements have been coming in and we're closing those out. It's been quiet in terms of applications, I think, just kind of with some recent news. And personally, still headed to the lake. We're still enjoying it, loving it. Took the dock out last weekend. So I didn't, but husband did. And dogs are enjoying it. So I mean, you got to enjoy this weather as much as you can because we know what's coming. That 4-letter S word.
For sure. Yeah, I've been out on several of the area lakes this week, working on some current new listings, some listings for spring. And yeah, just been absolutely gorgeous out there.
Oh yeah, it's wonderful. And it's quiet when everyone kind of packs up for Labor Day. They're gone after that. So it's so quiet in Lakes Country. But are you normally seeing a lot of places being listed in the fall for lake homes, or do you see them listed in the spring normally?
I would say more spring. There are some people that will jump in the fall. You know, right now is a little bit late. I actually had one group that said, I mean, I've been talking with them since spring and they want to put their house on. And then the next day they don't want to have it on the market. And then they're kind of up in the air. And it's always hard. It's a hard transition. Someone they're kind of giving up their home and kind of making that transition off of the lake. So I can appreciate that. But yeah, people are all over the board. I mean, I've listed lake properties into November and put them under contract in December or January. It's a little atypical, but it certainly happens. But I think, and obviously we'll talk more about what is going on in the market and everything else. I think a lot of people across the board are probably going to have more success in the spring than they're likely to have or are having right now, Kayla.
Yeah, I think that it's like we feel like we know what's going to happen, and then things change, and like we're about to talk about, it's amazing what, you know, things are going well, and then it's like kind of curves to the left a little bit, but we'll dive into that shortly.
So I think today's topic is panic at the lender. And Kayla, I have to ask, what in the heck is going on with What is this?
TikTok. Yeah. So as you can see, for people, you know, viewing this instead of listening, 30-year fix is kind of around that 6.92 average nationally. We look at FHA, about 6.3. Andy, if you click into those charts, on that 30-year fix, if you click that, like it truly breaks down. Like if you just click right there, Andy, yeah, it shows you October 23 to October 24. And do you see right now, we can see that low point in September, right? Before the Fed cut rates, we were anticipating for that cut. Now, remember, we talked about this last time. The Fed cuts rates, they don't cut mortgage rates, right? So again, your HELOCs, your credit cards, instant relief. But what we saw was rates have already kind of come down for mortgages a little bit. But as you can see, it's been ticking up ever since. And there's a lot of conversation around this. The biggest thing that I have been telling my clients and partners is, that Fed cut does not mean mortgage rates being cut. So I think everybody had this perception of, well, rates are going to come down because the Fed cut. Well, again, we had already seen the market anticipate for that. So we saw that cut, they came down, and now they're slowly coming up. And a lot of reports, a lot of forecasts don't really contribute it to one certain thing. But I think that there's a lot of confusion and a lot of anticipation around the election. And so, word to people wanting to buy that are looking at homes, wondering what your payment is, it's kind of back to that point where people might be saying, I'm going to wait till after the election. I hear it all the time. And as you and I have talked about, Andy, whoever gets to be the next president, their policies aren't going to go into effect like November 10th. They're not even going to be in office yet. So, I just keep telling my clients, continue to watch, continue to shop. Let's make sure you're approved. Let's refresh your approval because we never know when rates going to come back down again. And you cannot lock traditionally until you have a house under contract. So it might look cool that rates came down, but if you're not shopping or have a home, it's hard to grab that. So it's just really hard for buyers to really understand that you cannot really time this market. And this is proof right here. Look at what's happened in just the last month.
So Kayla, you talked a little bit about rates kind of slowly trending up, but what happened right here? Because I noticed rates had been gradually going up, and about, October 2nd, they were 6.25. Then all of a sudden, like later that week, they're up to 6.62, almost 6.7. Like what? Why the sharp jump there?
Yeah, I think a lot of that has to do with the 10-year. And what people don't understand is that, again, it doesn't follow that trend of the Fed rates. And so also there's been a lot of things going on in our economy. Like, look at these hurricanes that we've experienced. What was it? 2 huge hurricanes? And also to comment, look at what that does for insurance costs too. So that kind of goes hand in hand. But again, I think that because we saw that market adjustment where it anticipated that the Fed was going to cut, if that wouldn't have happened, can you pull up that graph again, Andy? I want to go back to that. When we look at where that dropped to where it was back, if we just drew a straight line across from August to now, I mean, we wouldn't have even seen, had we not noticed that, it would have been just a steady rate. And so there's been a lot of factors, mostly the 10-year, and I anticipate a lot of it is because of just what's going on in our nation. But I think that a lot of forecasters like Logan, I can't say his name right, Logan Mashami, I'll put this in the notes and send it to you. Sure. He has amazing data. I mean, data that's just insane. But at the end of the day, we don't know what's going to happen. We heard that there could be another, 50 basis points cut this year. We're in October. We've got 2 months left. And I don't know what's going to happen. And I keep telling my clients, if you like it, lock it. Because they could go up again. Yes, even though the Fed has stated there could be another cut. I mean, look what happened when they cut this time.
Sure.
So there's just been a lot of economic movement. A lot of the jobs report came back, not how we anticipated. Just a lot of moving parts, but I don't think it's contributed to one exact factor, Andy.
Sure. Well, I think suffice it to say, Kayla, that buyers are super confused right now.
As they should be.
Why rates didn't go down, even though it's been explained, and then even now, like why rates, are going up. I was talking to an agent who's pretty well connected with a national brokerage, and they were kind of talking about some national stats as well, Kayla, as far as home sales are concerned. And so for the month of August, homes in general nationwide sold for 87% of list price. So if a house was listed for 100,000, it sold for 87,000. So that kind of is indicative of a buyer's market, even if the inventory numbers don't support that. Moving ahead a month to September, homes sold for 89% of list price nationwide based on this national brokerage's internal statistics, meaning that agents maybe wisened up a little bit as far as pricing their homes, starting to price homes against what's on the market. And if they're not selling, using that as kind of a benchmark, as well, Kayla. You mentioned it already, but the election piece really does have something to do with this. This particular agent has been through or been in the market as an agent for the last 4 presidential elections, and even stated that he doesn't think they've seen as much uncertainty in an election year as we're seeing right now, with someone even saying that this is the most uncertain market since like 2008, which that was probably an overstatement, because that was a totally different market and a lot of things going on more so in the mortgage world, than we're seeing today. But the fact of the matter is there's a lot of uncertainty out there.
There is. And I think that, no matter what, when I'll talk to a client, Andy, and I'll say, hey, if rates move 0.5%, it's going to impact your payment X amount. We have those conversations. I think that the consumer just hears 6.9 or 6%. I'll have a client say, I really want rates under 6. And I'll say, well, why is that? Like, is that going to impact your payment enough? They don't even know sometimes. So we need to really be educating our borrowers on what does this look like if rates did come down 0.5%? And is it enough where you do not want to look at a home until it hits that payment? And, or what does it look like if it moved up? Like, at what point are you willing to say yes? And what point are you willing to say no when you're shopping? Because I think when we really break it down to the dollar, what each percentage or each 1/8 of a percentage does to a payment, it puts clarity in the borrower's head, and then they're confident. So if they're not confident, a lot of them are saying, hey, I'm going to wait till the election. I'm just going to wait, because I feel like it's a good excuse. It just seems like it. But I'll ask clients, well, why is that? Why do you want to wait? And they'll say, well, my mom told me, or, I'm seeing that, it could impact things. But in reality, I see an opportunity between now and end of year to get in before the competition heats up, because we know when rates come down, we know what happens. And after holiday season, it gets, ramped up again. So my best advice to lenders, to realtors, to anybody in this field is educate your people, and to clients, take the time to get educated. Talk to your lender. If they're not giving you this information, ask them. Talk to your realtor about, when is the best time to list? Are there comparables? Like, it's not just about the interest rate. And I think we need to keep that front and center.
So it kind of goes back to the cliche statement that we've heard on and off, to marry the house, but date the rate. That was your favorite statement, Kayla?
I cringe at it now. I don't know why. I'm but
I think a TikTok or two surrounding that.
Yeah, when I was at the top of the trend, before everyone started doing it. But it's true though, and divorce the rent, right? So I think that the message is simply where we were the last year or two. Do you want to create wealth through homeownership? Can you afford the payment? Do you have to buy because you're going through a divorce, or you have to move for a job? At the end of the day, what matters most to you? Because I buy things that I probably don't need, right? I sacrifice things so that I can afford other things. So as a client looking to purchase, all I can say is just prioritize what's important to you. And that could be staying in your rental, and it could be selling your house and buying a new one.
What about variable rate mortgages, Kayla? Can I show you what I found online?
I would love that.
So this you talking variable rate mortgages in 2023 versus talking it in 2024.
How dare we speak Merry Christmas? How dare we?
Merry Christmas, everyone.
Yep, spot on.
So are people talking variable rate mortgages again now today?
A little bit. I think that, people really would just want options. They just want options. And if they want an adjustable, if they want something that fits their need. It's always, I say prescription without diagnosis is malpractice. I say it every time. If it just depends on the person. Is it a cash flow thing? Where will they be after that, that variable rate, that adjustable is done? Like, what is your plan 1, 2, 3, 5 years? So it's being talked about. I haven't seen a lot of people commit to an adjustable rate. It really hasn't been a topic with a lot of my clients.
Sure.
Yes, but Merry Christmas.
Yeah, Merry Christmas indeed. So, Kayla, I think the moral of the story is, if you're out there buying, if you're out there, you're confused. I mean, a lot of the people in the marketplace are confused. You and I were talking earlier, and no doubt because of how slow the market is, there's likely going to be a mass exodus of mortgage lenders and
Yes.
real estate agents out there that just financially, aren't able to, to stay afloat in a commission-based business. And so I think, probably the biggest piece of guidance that we can give you is, to find somebody that understands the market better than anyone else. Kayla, I think I see that in you quite often as a lender, just with the examples that you're giving and really deep diving with people, when it comes to looking at all of the debt they have. And even though they may have a low rate mortgage wise, and I'd love for you to study and even, in a future episode, give us like, some hypotheticals, a scenario on how you've been able to help a client, because people don't even think about the big picture when they're going to buy a house. And I know a lot of lenders don't always address it. So find someone that understands the market better than anyone else, both in a mortgage lender and also in a real estate agent.
I agree. And I think too, it's like we can anticipate and guess what rates are going to do. We can advise, watch the 10-year, watch inflation, the jobs report, what's the Fed going to do. But at the end of the day, if your goal is here, I mean, if you got kind of like a broad range for your goal, I mean, just because you're not at that, lowest rate and lowest payment doesn't mean that you cannot, get into a home and start creating that wealth. And as most of my clients say, I just want something of my own. I just want a yard for my dog. We're expecting a baby. We need more room. I think that we have to bring it back to it being emotional and realizing that this is a lot of stress on consumers. You think about inflation, the cost of groceries, now rates, it's just another thing to add on. But when you sit and really get clear with a client on their goals or what their monthly cash flow is and making them feel good, I always go back to a confident client makes confident decisions. And at the end of the day, I would rather a client say, I made this decision because Kayla educated me and because Andy told me how to do it, versus I made this decision because Kayla and Andy just told me to. I mean, when they're signing on the dotted line, they'll be confused. So at the end of the day, it's just about education.
Well, and ultimately, that's what, when we talk about finding someone that understands the market better than anyone else, Kayla, our job is to really, if you're motivated, get you into the house that you want or get you out of the house that you don't want. So
Exactly.
those of us that are working actively, in the business every day, who do have a good track record and stats to back that up, we're here for you. So go find the right people if you're motivated, and you're spot on. I think, things are going to be a little bit quiet the rest of this year unless someone's truly motivated and prices their home right, or a buyer. Like I've seen buyers that have gotten some pretty remarkable deals even this fall. Because there just isn't the competition, and some sellers are truly motivated, others aren't, and so their homes are going to sit. But I think the spring is going to be a better marketplace for sellers. It's going to be more challenging for buyers, though, because of competition. We'll hopefully see lower rates, but with that, we're going to see more people in the marketplace.
I agree. And at the end of the day, I had a client say to me a couple weeks ago, he said, it's never a good time to buy, is it? Because, you got the competition, you got this. And I just said, it's always a great time to buy, because with the terrible side of whatever's happening in that market at that time, look at the good, look at the benefits. And each market, each year, it's going to give something great. It's going to give something not so great.
Absolutely. Well, Kayla, I think that's a lot of great advice. Thanks for breaking down the rate puzzle and kind of so eloquently explaining why we're seeing what we're seeing with rates. And of course, as always, for those that are watching or listening, if you have questions, feel free to reach out to either of us. Otherwise, thanks for tuning in. And Kayla, have a great week. We'll see you back here next.
I will if you will. Bye.
Whoa!